Markets.com, and today is Monday, ladies and gentlemen. Right, look, it's a busy week. We have another, of course, busy week. We have three major central banks delivering their interest rates, so we're going to talk about that, how the market can react in a way. So, hey, stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the 8th, if I'm not mistaken, the 8th of December, yes, 2025 still, but we're going to change that very quickly in a few weeks. So look, ladies and gentlemen, I hope you all had a fantastic weekend. I hope everybody's feeling nice and refreshed and ready to attack the markets. So this is going to be this is the second full week of December. We're still going to have another full week next week, and then kind of that's it. So we're then going to have like some public holidays, and and then the week after that it's New Year's week. So hey, that's kind of it in a way. So expect markets to be and this is where I'm going to see either very volatile or very dull. But well, to be honest, it's always like that. It's always either this or either that. So I didn't really tell you anything new here. Look, ladies and gentlemen, we're going to dig into markets. We're going to see what's happening. Certainly, what to expect. What are the technical setups right now in a few different asset classes. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, let me just put the usual good morning in the chat room. Good morning, everyone. As I keep on saying, this session is meant for those who just want to grab themselves a cup of coffee, tea, or whatever in the morning and just have a like a chilled introduction into the markets for today and to what to expect in a way. And in general what's happening. Also, I do encourage everybody to communicate and just kind of drop me like a message in the live chat. Look, if there is something that I can comment back with or reply with, or answer, I will always do. But if there's something that I don't know, I will tell you that I don't know, but I'll try to find the answer. Look, ladies and gentlemen, also just before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, so this week, let's talk about the economic calendar first, and then we will go into a little bit more specific elements. So Japan delivered some GDP data. We can see that. So the GDP growth annualized final number is minus 2.3 against the previous plus 2.1, ladies and gentlemen. So the GDP growth rate Q on Q final minus 0.06 against the plus 0.5. Okay, look, this is not good, certainly. We can all agree on that, in my opinion. But of course, they will have to do something about it. Maybe this is the little motivation by the government or something not to allow the BOJ to go and hike rates, because this is what they're planning to do at the end next week. And again, we all know that they want to do that. They want to protect the yen, but maybe the stock market could help protect the yen without actually going for those rate hikes, which the Japanese government doesn't really want to do, or doesn't want to see. They cannot do that, but it's the BOJ who does that. But they don't want to see that. Okay, of course, we understand. They recently got elected. They want to deliver on their promises because they want to spend the hell out of everything, and they need cheaper rates for that. So logical. Anyway, so we'll see how that goes, but certainly these numbers are not really, might not very well be received by the BOJ. And like I said, at the moment, the question is, are they gonna actually go for those hikes? And at the moment, well, the answer to me, at least, is that yes, they will. We'll see. Again, I don't have a crystal ball, unfortunately, so I can only tell you what I think in here. But anyway, let's see. China, going further, balance of trade balance came out fantastic. Fantastic. Look at this, 111 billion. Against the 111.68 billion against the 100 expected and the forecasted 90. Oh, sorry, the forecasted 100 and the previous 90. I mean, this is like an increase. Wow. Imports actually came out not as high as they were expected, as they higher than the previous, but still exports were the game here. Going further, industrial production, Germany 1.8, very good against the previous 1.1. Consumer confidence in Switzerland, well, that's a little bit of a better one, but still not so good. Consumer inflation expectation. Now, this is something that we will be watching today, apart because we don't really have much data. And I think that what's going to happen with the U.S. market, we might see some subdued trading. I think everybody will be just bracing themselves for Wednesday. I'll get to that in a bit. Very quickly on Tuesday. So we do get a few pieces of information here and there, but probably the main point will be the Australia's interest rate decision. As you can see here, the expectation is for the rate to remain the same at 3.6. Now, it would be a surprise if they actually do go for a cut of some sort, because again, so far, they're doing quite well in my opinion. Australia's inflation is, it's like, above target. It's 3.8 if I'm not mistaken. 3.8, there we go. 3.8 came out last time. The next piece of inflation info, we'll get on the 7th of January, ladies and gentlemen. So that's going to be the November number. And at the moment, of course, we don't have any forecasts yet, but still, it is a little bit on the higher side. Let me just double check. I keep on mixing them up, like in terms of, in RBA has inflation target. It's between, I think it's between 2 and 3 in inflation target. Yeah, between 2 and 3, and it's New Zealand that has between 1 and 3. There we go. So we can say that the inflation right now is on the higher side, or actually outside of the target, but on the higher side. And I said it before, and I'll say it again. I think that what's the next step in economy, what we should be looking at, and I said it before and I'll say it again, that we will be looking at inflation. I think that the inflation is going to be the next big thing, because again, I think that the market will catch up, that not everything is that good, with all the tariffs. I think the damage was done, and in a way in the US and Europe as well. There are like higher, I wouldn't say higher energy costs, but natural gas certainly is the one that is driving the up move. Oil, of course, yes, it's not the strongest one, so maybe somebody might. Yes, we can see that at the fuel, at the pump, and we can see that it's still kind of reasonable, so it's kind of okay. But in general, in terms of food prices, now that's where the issue arises, because look, although we can find cheaper food, we can see cheaper, some elements, some categories in the market, yes, cheaper, but it's the quality. I think that's where the issue is. So it's basically, you can find like cheap food. I think that's doable. However, the quality is questionable, and I think that's where the issue, and this issue will remain the big topic as we go further in our lives, certainly. the quality will continue to get reduced, or the quality will stay the same, but the premium will be attached to it. So that's what I'm talking about. So this economy I'm talking about, and people do understand them. They do educate themselves, and they do understand that instead of maybe I'll spend a little bit more on this one and have better food rather than just paying cheap or on that one. So that's where like I said, that's where the issue arises in a way. And of course, when more people do start realizing that, we as always, there's a problem of supply. Um, Supply demand, simple story, right? But anyway, look, long story short, for now, coming back to the RBA, I am not really expecting for them to make fireworks on tomorrow, but I keep on this element of the doubt, like if there's going to be some sort of let me just quickly adjust here. I want to open up this chart, yeah, look at this. We saw them drifting lower. We saw the rate drifting lower. How many times? One, two, three times this year. Are they gonna do it like a surprise fourth, just because do they want to be in line with maybe the Federal Reserve? But I don't really see why they should be, because they're quite sustainable at the moment. It's like Australia actually is one of those countries that throughout this whole year of this tariff saga year, they kind of managed to sustain themselves quite okay. You wouldn't see Australia in the headlines too much, because I don't think that it was even in the interest of the U.S. kind of to do something with Australia, like to threaten them too much, because I think that they see them as a good ally, especially given the fact that Australia is like loaded with natural resources, and it's a good one, right? So it's a keeper. It's a keeper, and it's favored. It's kind of favoring the whole U.S. policy as well. So why to kind of attack them too much? They did, I think, that like the little threaten them, like like for tariffs, but they actually quickly agreed in the background, and yeah. Anyway, long story short, for now with the RBA, keep your eyes on it. It's a very interesting moment. I will jump into Australian dollar in a bit, but certainly, yes, 3.6, what we're watching here, and that's the forecast. So let's see if it comes out, let's say at 3.35 or something like that, but again, I don't know, I really doubt that. Anyway, going further, ladies and gentlemen, going into Tuesday, yes. So ADP employment change weekly, not the monthly one, because last we got the monthly one on Wednesday, if I'm not mistaken. Let me just quickly. Yeah, that's the one. Minus 30. If you remember, just a quick reminder, right? I mean, that ADP before used to be like one of those numbers that, it's okay, give me the number, but are we gonna follow you that much? No, not really. But now, given the whole government shutdown that we saw in October, when it just messed up the whole Bureau of Labor and Statistics data here, now ADP becomes the more attractive option to monitor the labor market. And I really actually support that, because look, they managed to show that they're stable, they're not affected by these shocks, these government shutdowns, and the US government shutdowns. And was this like a one-off? No, it wasn't. It was basically like it happens every year in a way, right? I mean, just this one was the longest one, and like the longest holiday that they had. So yeah, in a way, like I said, ADP becomes more respected number, because again, it just gives us at least a glance. And honestly, with ADP, I talked about it in my videos, and not yesterday, sorry, yesterday, last week, I did, like I said, a little video here I want to show you. You can always check it out. ADP falls below zero. The latest top news: ADP falls below zero for the fourth time this year. And I gave my little opinion here and view, so you can check it out. But certainly, this is a number to continue to monitor. NFP, it will be important, but it's like, we're gonna get the NFP when. Let me just have a look here. I think it's gonna be employment situation. There we go, the 16th on Tuesday. So basically after the Federal Reserve interest rate decision. So yeah, I mean, it's like, and another thing is like it's gonna be, if I'm not, November number. There we go. It's gonna be November number. No, wait. It's not gonna be November. Because it's gonna be October. It's gonna be, yeah, it's gonna be November number because October number we're missing that one if I'm not mistaken. Let me just double check that very quickly because that was the confusion here. And where's that? United States here? Let me just quickly double check non-farm payrolls. Right. Yes. So it's going to be a November number, but it will include the October figures as well. So basically it's like going to be like a combo October and November because the September figure that we got on the 20th of November came out at 119K and against the previous, previous it was minus 4K, but they were the forecast, but that was changed from, it was a positive number before they revised the previous figure and it dropped to minus 4K. So yeah, the forecast was around 50 if I'm not mistaken, like 42.50 I think it was that, and yeah, it came out at 119, so double the number, double the forecast, and much better than the previous, but the previous got revised to the downside, so I wouldn't say it's a positive thing. In the short run, it's a positive thing. Why? Because it kind of gave hope for the market that the Fed will go and cut rates. So yeah, ADP, like I said, ADP is the one to watch. The weekly number will be quite interesting. Well, let me just go back into this. So what's interesting as well, going to be JOLTS. And let me just double check. So the job openings and labor turnover survey, which is on the 9th here. So that's kind of should be coming out. Hopefully it will, and yeah, I mean it's expected to go down. Look, remember the days when we had like a normal week where we had on Tuesday we had JOLTS, Wednesday ADP, and then on Friday we used to get non-farm payrolls. That was before like the government shutdown, right? Those were like those days. And now we're getting everything is a little bit scattered, and okay, in one sense, on one side maybe it's making the market a little bit more interesting or something, but on the other hand, it's like it's, I don't know, like it's getting messy. That's the thing. Anyway, going further, so yes, keep your eyes on these numbers tomorrow. These are going to be like the last kind of job numbers before the Fed comes out on Wednesday, and but before the Fed, the market will kick off with Japan with its PPIs. We'll get the inflation numbers from China as well. So yep, that's going to be a big one. And then slowly we're going to jump into the BOC, because the Bank of Canada is expected to keep the rates unchanged at 2.25. So they're going to be coming out. So we'll see what's going to happen with the Canadian dollar, because at the moment the Canadian dollar is, whoa, beautiful strength in there. But that was mainly driven. I will show you what I'm talking about later on, but that was mainly driven by employment last week. And then, yes, going further down the line, so we're going to be hitting the Federal Reserve, which is expected to cut rates by 25 basis points. Let's check out the Fed Watch tool, just a quick update right here. Is it going to be 87.2 still? Yep, 87.2, ladies and gentlemen. So, yeah, it's the last dance of these central banks before the end of the year. So yes, like I said, RBA, BOC, and Fed tomorrow. Tomorrow, Wednesday, and next week we'll get the other central banks, the BOE, ECB, and the BOJ. So prepare yourself for some fun action. Look, for now, long story short, we're keeping an eye on the Fed, and certainly the fact that they're going to go for rate cuts. I talked about it in my recent videos. I talked about the central banks here, top central bank decision this December, so you can check it out here. I like I said, I did a nice little video, but I can repeat what I said in a way that with the Fed, regarding the Fed, I believe that the Jerome Powell will be giving everything what the White House asks, because he's leaving in May. I have to correct myself, because in the few previous videos I said that it's going to be like March, April time, but no, it's going to be apparently May. So he's going to be leaving in May, and I don't really think that he wants to, leave on bad terms or something. So January, we're expecting what? We're expecting just the rates to remain the same on basically after the this week's cut. January will probably be the same. March, we're still expecting the rates to be the same, and going April, we are expecting to see a little bit of another drop, 25 basis point drop. So yeah, and then June, we're skipping this part where Jerome Powell leaves, and we're jumping into June, and then okay, look, this is a pure gamble. It's really even pointless to try to to kind of predict, or to kind of, let's say, take these columns seriously, because this column here, December, probability, if you remember, in the beginning of November, it was here. Then during the middle of November, it dropped heavily below this one. This increased that much, the no cut chance increased. But then everything started shaping, towards oh my God, the market is like, not loving the ADP numbers, everything is that bad. We need to kind of support the economy, and boom, boom, boom. There we go. We're seeing this one kind of coming back to life here. Anyway, so let's go further. Thursday into Thursday. So yes, Japan, not much, nothing major. Australia, unemployment numbers. So there is an expectation for an increase of 1/10% on the unemployment side. Still 4.4, still okay, but and then it's an S&B interest rate decision. Okay, look, I didn't put too much emphasis on these guys, because I don't think that they're going to drop it to below zero. The SNB, the Swiss National Bank, look, they were in negative territory. Last time they were around here. That was like back in August of 2022. So, and then basically in September they increased the rate, jumped above zero, but for a very prolonged period of time, from let's say the beginning of, not let's say, but from the beginning of 2015 till the kind of the middle, let's put it this way, the middle of or maybe the second half of the beginning, the first part of the second half anyway, of 2022, they were in negative territory. So yeah, it's an interesting one here. Are they going to actually drop back below zero? Well, they need to boost their economy for sure, but I think that they're going to stick with the zero for now, because last time they were sticking with the zero was back in like from August of 2011 till 2014. So for decent 3 years, like they actually they kept the rate at zero. So I believe that we are actually at somewhere kind of the same area. So for another, we just started the move, and this is, like I said, this happened in June. So for now, I think that this will continue moving further, and certainly for now it's the sorry, my colleagues here are like trying to jump in. Look, I think it's going to stay like this. I think it's going to stay like this for zero, and I think for a few years. Sorry for stumbling here a little bit. Got distracted by my colleagues, but anyway, it was all good. Anyway, look, going further. Canada-US trade balance coming out. So this is something that to watch out on Thursday as well. Core PPIs together with the headline PPIs coming out on Thursday as well. So we'll keep an eye on that. And yeah, in a way, that's kind of it for Thursday. Going further on Friday, what's going to be interesting here is that we're going to get the industrial production from the final numbers from Japan, United Kingdom GDP figures as well coming out. So okay, UK and Germany industrial production, manufacturing production, that's from UK. Inflation numbers from Germany, keep that in mind. Nothing major from China here, but going further, I think that build some few little speeches here from the U.S. From the U.S. governors, Fed governors, and Canada. That's it. Okay, so basically that's kind of it. So look, well, kind of it. There's a lot of things happening, and I think that the market, market participants should be careful, especially going into this last month. And this month could be a little bit volatile, not only from the economic side but also political side, because at the moment they're also trying to deal with this whole Ukraine Russia conflict, and that's also an interesting point that I will pick up on when we are going to jump into the commodities. But let's jump into indices very quickly. Let's have a look what's happening here. Nikkei still balancing, still somewhat positive. It remains above this little upside line taken from the low of the 19th of November. And look, for now, I'm still sticking to the upside. As I talked about it, as long as we remain above this upside line, I will continue targeting the upside. If we do break the upside line and we fall below the 49,216 zone, then yes, great, more sellers here could join in. Jumping into Shanghai Composite very quickly. Look, this one pushed higher. We broke again the 3,922 territory. I talked about it. It's not exactly the level that I'm watching. It's more the area. So if to be more precise, let's actually, I think that the area that we should be keeping an eye on should be somewhere around here. So this area between the 3,914 and 26 levels, if we do clear it, and we are clearing it right now, if we do stay above it, then I will consider a further move north, basically. So because at the same time we could clear the 20-day SMA, and which we are doing right now. Basically, we should stay above all this. I'm leaning towards the upside, and my next target will be somewhere around here, near the 4,334 level, which is basically still the current highest point of this year. Let's jump into Dow Jones Industrial Average. So on Friday, we closed in somewhat positive territory here. Dow gained plus 0.22. Nasdaq was the better performer, and the S&P, as always, somewhere in the middle. Look, what can I say? I talked about this area. If you remember on Wednesday, I talked about this because on Friday I was off, and I wasn't running the MarketsTalk webinar, but what I said to you in the beginning of last week, I said, look, this is going to be quite an important area for Dow, the 48,000 zone here. If we could be piercing it through, and which we're doing it there, but actually, if it's going to stay, if it's going to hold like this, then look, we could see another decline. So I'm not really in a rush to get comfortable with either the upside or the downside. I need a better confirmation. And given that this week is not the usual week, it's not your regular week, we're waiting for the Fed. We want to see what's going to be the reaction, and actually what's going to be the reaction on Thursday. Because, as I said, on Thursday, we will be getting the US PPIs as well. So that's going to be a big driver of indices and in general the US market. So in terms of the PPIs, by the way, we don't really have, I don't see like any major forecasts here. Let me just check another source. Maybe I'll see something else somewhere else. The calendar this week, let me just check here. So Thursday, okay, Thursday, where's that PPI? Come on, PPI. It's okay. First of all, it says like it's unclear a little bit that is it going to be coming out. Let's see the schedule here. By the way, let's see the core PPI. So yeah, Department of Labor. Okay. State employment, unemployment. Okay, we'll see if that's actually going to come out because Department of Labor, we don't trust them as well because again they were in shutdown. Okay, what can I say? For now, I don't really see any major forecasts to be honest. Forecast PPI October numbers expected to come out, forecasted to increase by 0.1%. Okay, honestly, I will not even say anything. I'll look at it when it comes out. At this point, when you have this such a messy kind of such a mess in the agencies, I really don't see the point of actually trying to forecast or predict here. No, just wait for the number. Let it, we'll see the market reaction. There will be some volatility, and then let the market settle down a little bit, and then we'll, try to determine the next kind of move, because then we'll understand, what the market wants, and do they want to go further north, and how the market interprets either it's a higher number or a lower number. But like at this point, I really don't see the point of actually trying to predict what's going to happen, with the market after these PPIs are going to come out. If they're going to come out on the higher side, look, yeah, this might be bad for the indices, like the usual, if they come out on the higher side, because this kind of pushes away the rate cut idea. But then the question is, how much higher is it? Is it still okay, sustainable to kind of move on with the inflation cuts, later on? So these little things, that we will have to evaluate then after the data comes out. So keep that in mind. The S&P 500. So sorry, from the technical side, ladies and gentlemen, look, if we pop and stay above the 48,000 zone, I'm going to go further north. If we stay below the 48,000, well, I'll consider a little bit of a retracement back down. The S&P 500 continues to push higher, and we do remain above this downside line. So my next target is the 6,920 zone, marked here by the current all-time high. So look, this one looks a little bit more positive, but again, there's, if Dow doesn't go, maybe S&P is not going to go. But looking at this one here, the Nasdaq is also at a critical spot. I talked about this last week, the week before, that if we do climb above this 25,223 territory here, then yes, the next target is the 25,700, which could be a good area of resistance, and you can see why. And it has been a good area of support and then resistance as well. So now it's taking the role of resistance. So maybe a bit of a retracement back down here could be possible. So we'll keep that in mind. For now, long story short, 25,700 is the next is the barrier that I'm going to be watching. It's not next, but is the barrier that I'm going to be watching. And if we do clear it and we stay above it, then great, more buyers could join in. The German index DAX. This one's somewhat positive, but like I said, it's going to be waiting, I think, for, maybe it will continue pushing higher, but it'll be waiting for the Fed and, the reaction of the market to the Fed. So we'll keep an eye on that one as well, but certainly this idea worked out before, so I think I need to update the chart here. At this point, what I'm going to do here, I will just keep an eye on this downside line, taken from the high of the 9th of October. So if this downside line does provide good resistance, then okay, we could see a drift back down here, something basically like this. But you know what? I really do wanna keep an eye on this little hurdle right here, this 23,884. If that gets dropped, if we do drop below this, then I will consider a move lower towards this highlighted zone that I talked about before, and I think that this is a good area of potential support. So What can I say? For now, it's the upside scenario, kinda, but just like I said, the upside scenario is limited to the downside, to this downside line. The FTSE is okay. I think I need to get rid of everything here and have a fresh look. So look, it is still oscillating around that 20-day SMA of my Bollinger Band here. Mm, it's not really ideal, picture perfect scenario here for now. We did that retracement that I talked about, 50%, but keep an eye on this all-time high. I'll keep an eye on the all-time high even more if we do push through this barrier, this 9,744.45 zone, I would say. You know, if we do clear that area, wonderful, great. I will, like I said, I will consider a move higher here. If we do look at the idea of the possibility of some downside scenarios here, 9,593, 94 zone, I think that this is what we need to see. A drop below this hurdle, I do understand that we're missing out on this territory, but a drop below this hurdle kind of increases the chances for a further drift lower, because at the same time we could fall below the 50-day EMA shown here as the green line. DXY dollar index looking good here, and what can I say? At the moment, it's flirty. It's flirty with this 90.99 zone. So, or in general, the 99 zone. So it's a little bit messy. Don't get me wrong. It just violated this, and But overall, I think what we can do here is just we can keep an eye on that 99 zone, but overall, keep your eyes on the fact that we're below all the EMAs here on my daily chart. The green, the blue, and the white one here, the 50, the 100, and the 200 respectively. So we're currently below all those lines. And in a way, that could be seen as a bearish indication because we're struggling to push back above some of those. So, long story short, for now, I'm going to lean towards the downside on DXY. So, and the fact that lowering interest rates is not seen as a positive for the greenback, so it's kind of logical, at least for now. Sorry, I had to warm up my throat here a little bit with hot tea. But the thing that I can justify why DXY could push back up is if we do see, or hear actually, the Federal Reserve Chair during the press conference saying something that, you know what, we are gonna, yes, we're lowering the interest rate today, blah blah blah, we already lowered it, but actually we think that we will like take a pause, and we're gonna see what the market does, and we will take the pause for now, and that's where the DXY for the upcoming months, and then basically we'll increase those rates maybe closer to before I leave, something like that, before the Federal Reserve Chair leaves. And this way, like I said, this way we could see the DXY actually pushing nicely to the upside, in my opinion. VIX, just a quick glance at VIX. Okay, we dropped, so we had this major move in the middle of November, so we're now below. So okay, we're at an interesting level. So look, volatility right now is kind of creeping up, or at least trying to creep back up, but something tells me that we might stay like this for the remaining of December, because let me just check how historically January performs to the downside. 2024 slightly higher, 23 slightly, oh actually not slightly, to the downside. 2022 beautiful move, strong move to the upside. So, and then 2021 a move to the upside. Okay, so if we're looking at, let's say, from 2020, in January we had a big move higher. 2021 as well to the upside. 2022 as well to the upside, strong moves. 2023 subdued to the upside, so already 2023 to the downside, apologies, the wrong candle, so to the downside 3, now like 1 to the downside. 2024 We're going higher again, but not much, so it's really subdued. 2025, we're again to the downside. So look, if we're following this pattern, that there is a little bit of like cautiousness, then maybe actually we could see like not a very strong move in January. Maybe it's going to be a little bit on the quiet side. So keep that in mind. Unless maybe we're going to break the trend and just going to pop higher or something like crazy will happen. So just wait for the events. But at the moment, maybe we'll actually stick to like something calm here going into January. Let's jump into the Forex world, AUDUSD. So of course we're watching this one very carefully. So like I said to you, look, we had a great retracement here. Great rally. We pushed higher from these levels here. I talked about this idea of a squeeze of some sort. Look, it's not a picture perfect triangle. Honestly, like I suggest you just not kind of following this too much, because this is more of a for me moment here. But the fact that we pushed higher, we hit a nice little hurdle here, and the question for me right now is what's going to happen next? Are we going to actually retrace now? But don't forget that tomorrow we have the big announcement, the interest rate decision. So if you are trading something Australian dollar related, well, I would say chill a little bit, because let the interest rate come out, let them have their speeches, and then we can see something what could happen next. If the interest rate remains unchanged, I think this could continue applying positive pressure on the AUD against the USD, and we could see this one going further north. So at this point, as much as it tempts me to go lower or something short this one, I really don't want to do that, because again, just because we're in this central bank week, and surprises might happen, and we could still travel a little bit higher, maybe test 0.6707 territory right here, highest point of September, and then reverse back down, because don't forget that this is the highest point of this year. So we're not far. We're not far. Maybe we could create a new one, a new highest point for this year. Just keep that in mind, ladies and gentlemen. AUDNZD, just a quick glance here. Beautiful break. There we go. We broke. Look, I talked about this on Wednesday, on Monday as well. I love this pair. I do love this pair because it's very technical. And look at this, another like a falling wedge here, broke into the upside. Picture perfect. Honestly, this is just amazing. And yeah, now it seems like it wants to go higher, but let's be a little bit more on the careful side. I would say this little upside line here could be something to keep in mind. So as long as we stay above this little upside line drawn from the low of the 28th of November, then yes, I will continue targeting the upside. But if we do fall below it, below this upside line, then yes, it is opening the door to some lower areas. AUDCHF, one of my favorite ones, and I talked about this. I warned you about this kind of little range here. There we go, boom, boom to the upside, and we climbed above all my EMAs now on the daily chart. So I will continue sticking to the upside unless this somehow magically falls back inside the range here. Then yeah, I'm considering a little bit of a move back down. AUDJPY continues to push up higher. Yes, certainly. We cleared this key area of resistance, which is roughly between the 102.40 and 61, 62 levels. So great, amazing. Let's see what's going to happen next. For now, I'm going further north, and given the fact that it's our risk on, risk off monitor, it's showing us that the indices actually do still want to go higher. Let's see if that's going to be the case. NZD USD also pushing higher. NZD JPY, beautiful move to the upside, continues to push higher. NZD CHF. So everything, risk currencies are dominating right now. We're pushing higher in this one as well. So everything is looking quite nice, I would say. Looking quite cool. Cool for the bulls. EURUSD. Okay, look. Now, there was a comment, from what I understood this morning, or when, but I heard it this morning, that they are, what was the comment, just a second, like, Yeah, the interest rates. Yes, ECB. It seems like they're now considering actually to go and hike rates. Did I talk about higher inflation before? Yes, I did, ladies and gentlemen. Honestly, like this is what I'm saying, that I think that everybody understands this. Nobody's stupid. You do understand that. Yes, okay, the lower interest rates are helping the economy to grow. But the fact that you will have to deal with inflation, and so far the only popular method of dealing with inflation is increasing interest rates, to kind of make the lending more expensive so that people wouldn't lend. But of course, then you have to harm your growth in a way. So it's like I said, it's stick with two ends as always. So for now, we're and this is where we saw EURUSD kind of popping nicely again, against the US dollar here to the upside. Look, what can I say? For now, I will continue targeting the upside, but only if we do stay above this 1.1650 zone, because we had that pop, but we're struggling. So look, if we're gonna clear this again, great. But even better if we clear the high of last week, just for that extra, little sprinkle, the Christmas sprinkle on top, right? And if we can get this clearance, wonderful. I'll go to the upside. Euro CHF, just a quick glance. What's happening here? Continues to push higher, and I think that it will stay like this because of what I said to you before, that if we do push through all my EMAs, I'm going to continue targeting the upside. EUROJPY, beautiful. I'm watching this honestly, ladies and gentlemen. I'm strongly recommending this to watch this pair, because keep your eyes on it. Again, which way is it going to break out? I have no idea, but according to all the TA rules, technical analysis rules, it should but theoretically break to the upside. But because the prevailing trend is to the upside, we're getting into a squeeze now, so it's like a continuation pattern here. However, how many times I've seen this happening in the opposite direction? A lot of times, honestly. So that's why I wait for the clearance, wait for the confirmation breakout, and then we can do something about it. But at this point, I wouldn't touch it. I would just observe the price action and rate action, and wait for the clearance. Let's jump into GBPUSD, ladies and gentlemen, very quickly. GBPUSD, good push. Look at this. My target got reached, 1.3370. I talked about it. I threw out the little technical piece here for our VIP clients as well on this one when we were banging on here. Great. What's next? Well, simple. If we do push and stay above the 1.3370, then I'll go higher. I'm not really going to invent here too much anything, but if we do start falling below all my EMAs here, the 100, the 50, the 200-day EMA, I'll consider a move lower, something like that. Let's jump into USDCAD. So, ladies and gentlemen, look at this. 1.397686. We clear that like a piece of cake or something, like a knife through the piece of cake, and we just pierced through the. Well, I was targeting the 1.3891 zone right here, but hey, this just didn't stop. Look at the drop here from 1.39.5 all the way to 1.38. Kind of 20, something like that. And look, I think that, and this came on the positivity of labor numbers, which came out on Friday from Canada. Look at those numbers, ladies and gentlemen. Look at this. Unemployment dropping from 6.9 to 6.5. The forecast was at 7. This is a surprise. Now, this is a surprise, and this is the market. The market loved it. Now, I'll jump into commodities in a bit as well, but certainly the fact that oil is on the higher side, it's also fueling the Canadian dollar, because Canadian economy really depends on oil a lot. So, long story short, for now, look, at this point, if you've missed the drop, I would say if you missed this move here, look, I would say just chill for now. Maybe we'll see a little bit of a retracement back up here, maybe like a nice bearish flag formation, and then we could see a drift back down. So again, this is what I'm keeping an eye on, because I mean, I would love to see a bearish flag of some sort, because it would be a waste of this such a beautiful pull here. and we could see, like I said, a nice little retracement back up here. And if we, if that happens, if we do continue to trade below the 1.3891 zone here, then yeah, another decline here could be possible. USDJPY very quickly. This one's still holding and still somewhat bearish because we're below my 20-day SMA. But yeah, I need a drop below this 154.80 zone. I think this is a good area. It has been a good area of resistance, support. Although we pierce through this one occasionally, but we struggle either to stay above it or to stay below it, and that's why I'm going to keep an eye on this this hurdle. USDCHF, we remain above this downside line and continue to flirt with it, but it seems like it wants to go higher. So maybe USDCHF knows something that we don't know, and maybe that's where the reaction of the US dollar is going to be the positive one, despite the cut. And this is what I talked about earlier, that maybe we'll see a cut, but then the Fed during the press conference will say, oh, you know what, we're not planning to do more cuts in the near term. So yeah, there we go. Welcome to a stronger dollar. Look. Okay, let's jump into gold, ladies and gentlemen, because I think that the commodity world is very, very attractive right now. And what's interesting here is that, look, on gold side, it wants to go higher, but this 4,245 level is providing a little bit of resistance. So, long story short, for now, I'll remain cautiously bullish, but a confirmation break through this barrier is needed for me. For the downside, what I need here. Is a drop below this upside line, and if we can get that move, wonderful. I'll go a little bit lower. Silver, okay, this one looks positive, somewhat positive. It seems like it wants to go and reach that $60 mark, and to be honest, by the end of this year, why not to give the bulls this kind of present, for before New Year and kind of hit that $60 mark. We're not far from it. We, came close to doing that in a way, but we're struggling right now for now with this area right here around this 59 zone. So if this 59, or actually, yeah, roughly, actually, it's I don't really have a good level here or something, but I would say the 59 territory is, if we're watching down, if we do remain below it, I think another decline here could be possible. But if we do pierce through that again and stay above the 59 zone, hey, ladies and gentlemen, $60 mark could be the next good target. Platinum, very quickly on platinum, looks like a bullish flag. But I need a confirmation break through the 1,662. And once again, I'll target the 1,731, and then if that gets cleared, I'm going to go further north. That's it. Very simple. Palladium, I like it. I talked about it. I also threw out a little piece here for our VIP clients that last week that we were watching this little range here. Is it a bullish moment here, I would say? I don't know. Because the prevailing trend is to the downside before, despite the big rally we had there, the big move happened to the downside before entering this little range. So according to all the tier rules, such patterns tend to break to the downside, but again, a clearance is needed, but we're currently near the upper side. So it's like, everything is really messed up here, but at the same time, attractive, and we're watching this one very carefully. So keep your eyes on that 1,486 zone. If we clear that and we stay above it, then I'll go a little bit more to the upside. Copper, very quickly, all-time highs. Copper right now is the headline metal in a way. It's hitting all-time highs. So what comes up must come down. But look, I talked about this. If you remember, I've drawn this Fibonacci extension here, which is taken from the lowest point of 2020 to the highest point of 2022, and then to the lowest point of 2022. And this Fibonacci extension shows me that we stalled near the 78.60 here, and now it seems like we're on track to go and test the 1000. I was aiming for the 1100, but 1151 here, it sounds a little bit more interesting. So it's the 100% here on the fifth Fibonacci extension. Whenever we're in uncharted territories, my beloved Fibonacci extension is the one that I'm keeping an eye on. Prodigy. But if you're referring to the Prodigy, then yes, cool nickname, but cool setup. Which one are you referring to? Because there is a little bit of a lag in the comments. So are you referring to copper, or what are you referring to? So like I said, just because there's a little lag, so that's why I always ask people, if you're commenting something, then just let me know about what instrument. But yeah, look, BTC coming up in after I finish off with the commodities here, and then BTC is the next one. So yeah, like I said, copper, keeping an eye on this one. Still, like I said, I still see some more upside. So let's see what's going to happen there. Sugar, my beloved sugar, and we're falling below this upside line. There we go, where there is a little bit of weakness, but I'm not really giving up on sugar yet, because it's still here, still holding above my 14.74 zone. So in a way, there is a chance of a move higher. But hey, let's let's be a little bit more on the careful side. If we do fall below the 14.74, then I'll go lower for the upside. I'm waiting for a clearance of that 15.25 zone, and then I'll go from there to the upside. Soybeans, beautiful test here. So somewhat of a head and shoulders pattern forming here, where we kind of already broken the neckline. It's not no, it's not the picture perfect here. I think I'm better off just forming, marking some of these levels. 10.96, we dropped below that. Okay, that's great. So we're now resting on this other key area of support, which previously was seen as a resistance. So if we do clear this territory right here, this between 10.7783, then yeah, great, I'll go lower. But yeah, it is an interesting one. Let me just draw this one. Okay, so yeah, a little bit more on the bearish side, but I think that we could see a problem with this highlighted zone right there. US oil, very quickly, US oil, there we go. We cleared this area, this downside line. We're struggling with the 50-day EMA here, shown as the green line. It's providing good, strong resistance. But if we do push above that, I'll go towards my 62.59 zone. Look, oil, I wanted to say in the beginning that, and what I was starting to talk about with the whole Russia-Ukraine conflict, basically. So if we do see a peace treaty, which probably nobody, only the people need it, right? The people, like your average day people, need the end of the war. But bigger economies like Europe, everybody's involved. Everybody's kind of taking, the conflict allows them to justify the military spending. Congratulations, as always. That's why you need wars. You justify military spending where a military fork costs like $40, and then because it's a special fork, right? I mean, anyway, just one example, and that's why, like I said, you need the peace talks. I mean, okay, the war has dragged on for too long, but what I'm saying is that if there is an issue with or not an issue, let me just phrase it correctly. If the peace plan goes through, we will see more oil into the market, right? You understand from where. And greater supply with the current kind of a little bit of a crappy demand, that could drop oil very much further south. The $50 mark, I think that's quite realistic, and that's what could happen. But if we doesn't, then this is where right now oil is picking up again, with the fact that China kind of shows stronger numbers, trade balance is good, so that's also helping oil. But in general, like I said, watch out if there's, like I said, a peace treaty, then congratulations to the people, the regular, ordinary people who are, who are involved in all this and kind of in all these political games. But yeah, just a second. Sorry, I was reading Prodigy, Pro DJ, comment here. But yeah, like I said, coming back to the topic of oil. I'm like I said, it's really, it's all political, and unfortunately, everybody needs resources, which are nicely based in the eastern part of Ukraine where the conflict is happening. So it's always about the money. It's always about the money. Anyway, WTI, that's the situation with WTI. Now, Brent oil is a little bit more. I would like to see bearish, but the fact that it's flirting now with this upper side of the downside channel, it gives me the opportunity maybe to consider an upside move. Now, if we do clear this downside line, then I'll go a little bit more to the upside. By the way, Pro DJ, which AMA do you see as the strongest dynamic resistance right now? Again, of course, the 50-day EMA gets tested more often, right? Because it's the faster move shifting, and the 50-day EMA does do the trick a lot of times. Just because, like I said, it's of course, you might say, oh, but what about like the 21-day EMA, right? It's also good. It depends on your strategy. It depends on how you approach the markets, and you have to be consistent in a way. You should not be jumping around too much. Let's say you have like 3 EMAs that you follow, which I'm doing, and I'm just constantly trying to see, I'm trying to see how the rate moves in relation to those EMAs, and I tend to look at it on a daily chart most of the time. Certainly the 200-day EMA is interesting when there is a big move, big shift, and that's when you shift your views towards the 200-day EMA. But the 50 for your daily trading, I think it's quite useful, even on the shorter time frames, like 1 minute chart or something like that. So it's again, I'm not encouraging this, but again, this is what works for me. For you, it might not work. For somebody else, it might not work. So, but we always try to find this this idea, this strategy, which can work for you. That's why I keep on saying, don't listen to people even like me. Do what you're comfortable with. You can listen, just like take in a few pieces of information here and there, but then you yourself, you need to build that strategy and build that kind of understanding, what you're going to follow more, or less, and stuff like that. Anyway, natural gas very quickly before I can go into the ZERT. Beautiful move. Look at this, 5 point. I don't know. Like, honestly, this is great. I talked about the 5 level for a while now, and since the beginning of November, I was talking about 5 level. There we go. Boom. Is this the moment for a turning point? I don't know. And for me at this point looks a little bit more bearish, so I'm considering maybe a little bit of a retracement at some point here. Maybe we'll see a push back up, a failure to reach this peak here, the highest point of this year, and then yeah, if we do see that failure, then another decline here could be possible. How significant is this long-term downtrend line? Are we close to a structural shift? Again, please, you see, I've moved away from the chart. Are you talking about oil, or you're talking about Brent, or are you talking about Brent here? I mean, please let me know which instrument, because again, this is, like I said, I am the chat. You see, I jumped off already from that kind of instrument, and like I said, it's just, and which one I really don't know what you're talking about, because I started now talking about natural gas, and I can see that if you're talking, I don't know which one. Let me know which instrument are you talking about. In the meantime, I'll jump into Bitcoin. Bitcoin. So, ladies and gentlemen, we are seeing some nice movement to the upside here. Look, oil. Which one? WTI oil or Brent oil? Because you have your US oil, you have your UK oil, which is WTI oil, and Brent oil. Which one is it? Brent oil, I'm assuming. I don't know. So yeah, coming back to Bitcoin. Bitcoin, basically, where did you the downside line which you saw? US, right? There we go. US oil. Let me just go back into this. US oil, I don't see. Right. Okay. So you're talking about Brent oil, I'm assuming, right? So this downside line. Look, this downside line, I'm assuming that you're talking about this one. Correct me if I'm wrong. But how significant is this? Are we close to a structural shift? Like, you mean how the fact that it moved a lot from this downside line, and you're thinking like, are we ready to to move higher here? Look, this downside line is not the significant one. No, this is something that I'm gonna keep an eye on if we do see a push higher, if we do see a move back up here. If we do see, let's say on the daily chart, which I'm looking at, if we do see a move back above the 200-day EMA, then this downside line to me becomes kind of a good target. At this point in time, is just a line, is just a tentative line, because it's a tentative line. We only have two touches here, and this one's drawn from the highest point of 2024, and to be honest, it can be pointless. The only thing is that it becomes, you look at these lines in a way, you don't try to kind of put too much emphasis on it. Of course, it's case by case, we have to accept that, but at this point, in this case, it could be interesting if we do see a push above the 200-day EMA. At this point, I want to just deal with this one. Look, will oil go back up at some point? Yes, it will, but we don't know when. We don't know when, and we really don't know, so that's why it's a little bit, would be wrong to preoccupy your brain with some sort of lines which might not even, carry any significance. At this point, it looks good. It does. Okay, fair enough. But can it carry some significance? No. So anyway, long story short, for now, look, it does look, the structure here looks like a bullish flag. We have our pole, we have our flag here. Let's break out higher. Maybe we could be, but that could be a short-term move. We could see a push higher. We could see clearance of the 50, the 100, and maybe they'll reach the 200, test it, and then boom, it will reverse back down, and we'll have ourselves a beautiful descending triangle pattern or something like that. But at this point, forget about, ladies and gentlemen, forget about this one. Just for later, maybe. Bitcoin. Oh, I'm running out of time, a little bit too much here. Bitcoin is pushing nicely to the upside. Look at this beautiful thing. It's breaking my steeper. Now, this is the point where this steeper downside line is actually playing a good role. You see, we have our, we had two touches, and then I have drawn this one. We had a hold up here. It also coincided beautifully with my other little area of support and resistance, which was basically this one, and it held nicely here. It reversed back down, found support near the 20-day SMA ish, roughly, and kind of actually found support near the 800 zone, which has been a good area of resistance before. Now it took the role of support, so it did reverse from here, and now I'm kind of considering a move higher, to be honest, towards the other downside line. I'm not getting way too comfortable with higher levels, because at the moment I'm just kind of considering this little moment. We're breaking the downside line. Let's see if we can go to the next one, next downside line, taken from the high of the highest point of October, and this line also coincides nicely with the 50-day EMA right here, so good potential target. That's roughly around the 95, 96 zone-ish, something like that, and then we'll go from there. What I said, I'm going to get positive if we do push above the 99 zone, then I'll get a little bit more interested with higher levels. Bitcoin Cash, my favorite one, and beautiful move here. My next target is the 615. I know it's not far, but I just don't want to overdo it, and maybe we could go to the current highest point of this year, 650. But in general, Bitcoin Cash is quite an interesting one. And look at this. Is it the all-time high here? No, we have been at levels here. So plenty of more room to go. It seems like that at least. Ripple. Ripple pushing back up. Yep, great. Moving towards this downside line. Let's see if this is going to happen. Yeah, look, for now I'm going to, like I said, keep an eye on this downside line. This one's taken from the highest point of October. Sorry, the high of the 5th of October. If we clear that one, I'll go to the upside a little bit. Ethereum, okay, look, I mean, we're all approaching these nice downside lines, but for me, the upside on Ethereum could be from the 3,244-ish zone here. If we do clear that, wonderful, I'll go to the upside. Litecoin pushing back up, but getting a little hold up near the 20-day SMA, so it's not really a done deal yet. The Bitcoin family is doing better, to be honest. Well, to be honest, I think that they always will. And for now, if you're looking for some higher levels, a push above the 87.83 zone is, I think, needed. Dogecoin is looking good, rebounding here, but I think I need to see a drop below this 0.142829 zone, something like that. If we can get that, I'll go lower, but for now it seems like it wants to go for a larger correction back up. Polkadot, beautiful move back up. Let's see if we can clear. Basically, this 2.35 is kind of the barrier that we're struggling with. So if we can climb back above it, great. More buyers could join in. Tron, okay, climbed above my 0.2835 zone right here. That's wonderful. Let's see if we can go further and climb above this 0.2883, 84 zone, something like that. If we can do that, I'll go towards my EMAs here, all of them. That's kind of it, ladies and gentlemen. So that is a wrap. Thank you very much for watching and listening. Pro DJ, I do appreciate your commentary. I really do, because that helps a lot, and it actually makes the show a little bit more interesting. So thank you for that. Thank you very much for watching and listening, everybody. For those who are watching this live, I really appreciate you kind of killing an hour of your life with me, but I cannot say it in other words, but thank you, honestly. Thank you very much. And ladies and gentlemen who are watching this as a recorded session, also, thank you very much for your time. Ladies and gentlemen, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine, and I shall see you on Wednesday. Bye for now.